Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 12th of June 2019, so welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to rest, and we can continue. Okay, so also just a quick mentioning here, please visit our JFD Bank page here on YouTube. I really recommend you to subscribe to subscribe to our webinars and videos, different ones that we do in different languages as well. So feel free to check us out, and do click subscribe, and just not to kind of miss any of our videos that we do on markets, on different trading strategies. So I believe that you can find a lot of good value in those. So but for now, let's jump into the charts. Now the first one I want to touch on here is the S&P 500. Now looking at this, yesterday it closed slightly in the red here, and of course we can see that this is where the index closed. It closed near the 2,885 level, and it managed to move away from this 2,910 zone. Now I talked about this one previously, and I was talking about this potential area of resistance that could play out nicely here. And as you can see, initially the target was around the 2,913, but just fell shy from a few points from hitting that target. But for now, in a way, looking at this chart, we can see that it may, in a way, could slide a little bit lower here. Looking at the futures futures market right now, looking at the cash index on S&P 500, we can see that the opening could be slightly below the yesterday's close. So in a way, we could see this one just around here, a little bit below the yesterday's close, but not significant, to be honest. So in a way, we could see this one sliding a little bit lower, potentially maybe testing the 2,869 level here, which marks the high of the 21st of May. And if it plays as a nice good area of support here, then we could see this one curving up and pushing to the upside. So in a way, what we could see here is something like this, of course. Now, of course, don't get me wrong, we may see this one sliding a little bit lower here, potentially maybe even testing all of these EMAs here on the 4-hour chart. Now this could be quite interesting to see, because if this travels below the 2,869 level, but let's say struggles to overcome all of these EMAs here, the 100, the 50 and 21 EMA, shown as the green, red and in yellow lines respectively, then like I said, this could be a nice territory for the bulls to step in again and push this one higher. Now, of course, this could be a bit of a tricky one here. In a way, for those who are more on the cautious side, you could in a way wait until we see a push above these recent highs near the 2,910 zone. If we do see a nice good push above that, then this could open the path towards the all-time highs here, near the 2,942 zone, approximately there. Sorry, that was the previous all-time high that we saw here back in 2018. But slightly above that, we do have the 2,954 zone, which is this year's all-time high, or should I say, just in general, the all-time high for this index. So for now, basically, yes, we could see this one traveling higher, but keep your eyes on a potential correction first, because like I said, we did have a nice good run here from the beginning of June, especially on the starting from around the 3rd of June here, when we had this nice steep move to the upside. So in a way, we could see a small correction before another leg of buying. So keep your eyes on this one. But for those who are more on the cautious side, you could in a way wait until we see a nice good clear break above the 2,910 zone, and then aim for higher levels. And by higher levels, I mean the previous these all-time highs. So the all-time high of 2018, which is around the 2,942 zone, and the highest point of this year, and of course the all-time high, the 2,954 area, approximately there. So if this decides to, let's say, slide lower, and for us now, let's say, to consider the downside here, we would need to see this one falling back below the 2,800 level, and only then we will consider further declines. Because in a way, if this falls even below these all these EMAs that I've just mentioned, this is going to be our little neutral territory here. So we're going to kind of just stand away and just continue observing this index and see what it wants to do. But if it starts falling below the 2,800 level, then well, I mean, this could turn out to be ugly for S&P 500. So for now, keep your eyes on these levels that I've just mentioned. Let's see how this is gonna play out. Jumping into WTI very quickly here. So I talked about this one recently, and I was telling you guys to keep a close eye on this level right here near the 54.60 zone, and this, of course, little short-term downside resistance line. So you can see that the commodity tried to push higher towards this downside line, but kind of failed to do so, and then it started falling below this another area that I talked about as well, the 52.62 zone, approximately there. So it broke below it, and now it's kind of shifting to the downside a little bit. Of course, this 4-hour candle right now, the most recent one, is of course trying to recover some of its losses. But to be honest, if it continues to trade below the 52.62 zone, then we may see another leg of selling, potentially leading towards this area right here near the lows of the 5th of June, around the 50.60 zone. So could be a nice potential target. But again, for now, yes, it is trying to recover some of its losses, but then again, if the bears kick in again, then yep, it could in a way revisit the 50.60 zone. So keep your eyes on that one. For us to consider the upside, ideally we would like to see a nice good push initially above this downside resistance line, but ideally, probably just for that better confirmation, a nice good break above the 54.60 level could do the trick in order to kind of aim for slightly higher levels. And by higher levels, I mean the 56.87 zone, which is marked by the low of the 29th of May. And of course, we will aim for the 200 EMA here, but for now it seems that the upside could be slightly off the table, so that's why I focus on the downside for now, especially if it struggles to overcome the 52.62 zone. The last kind of resort here for the bears to step in could be this downside resistance line if the commodity kind of fails to push above it, or let's say fails to stay above this downside line. So then yep, we could see another leg of selling here. For now, we are targeting the 50.60 zone. Jumping into DXY very quickly here, and so this one is a bit of a mess here. So I've talked about this one recently also, and what I was saying here, guys, that basically we need to keep close eye on this downside resistance line. This a bit of a tentative one, as you can see how for the whole day today this the index was flirting with this line, and right now we are seeing now a nice good push to the upside. It's pushing it back above its pivot, which is a good sign here for the bulls. In a way, this could travel further up here, but in order for us, let's say, to get comfortable with slightly higher levels on this one, ideally we would like to see a push above the let me just quickly adjust this level, guys, very quickly. So a nice good push above the 96 point, there we go, and there we go, above the 96.94 95 zone. Then we will consider higher levels, and higher levels like the 97.18 or the 97.37, which probably by the time, let's say, if if by the time this could approach that level here, the 97.37, would coincide with the 200 EMA here on the 4-hour chart. So good potential targets, but we will only consider the upside only if we see a nice good break above the 96.94 level. So just let me highlight this one for our future reference, and there we go. So that's where we're going to be targeting for the upside. We need to see that nice good break and a close of the 4-hour candle above this before we could target higher levels. In terms of the downside, as you can probably see now by the highlighted area here, we need to see a nice good drop below the 96.45, and only then we will aim for lower areas. Now, in a way, let's actually get rid of this this downside line a little bit, because it's a little bit in the way now, and given the fact that it was violated a few times. So for now, we're gonna monitor this key area of support, which if broken could open the path towards lower areas, because this would confirm a forthcoming lower low, and we could then aim for the 96.21 or even lower. But for now, it seems that it is trying to push higher. It seems that it's kind of pushing away the downside scenario. So and now we could be focusing on the upside. But then again, for the upside, at least to consider higher levels in the short run, ideally we would like to see a nice good push above the 96.94 level. So keep your eyes on that one. GBPJPY, I talked about this one this week already, and I kept talking about some of these key levels here. So basically, we were testing yesterday. We were testing this area here, this key area of resistance near the 138.17. You can see that the pair struggled to close the 4-hour candle and kind of retraced back down, but also stayed above this little. And now we can say that it's not a very tentative, but a nice upside support line. So it stayed above it, and today you can see that it's now trying again to push above this 138.17 level. We need to see that nice good close, at least of the 4-hour candle, above this level before we could target slightly higher levels. And by slightly higher levels, I mean the 138.74 zone here, marked by the high of the 30th of May, or further push higher towards the 139.64-65 zone, approximately there near the highs of the 27th of May. So basically, long story short, guys, for now, keep your eyes on this level right here, the 113.17. We need to see a nice good close of the 4-hour candle above it before we could get slightly more comfortable with higher levels. In case this reverses sharply and drops below this upside line here, this upside support line, still, in order for us to aim for lower areas, we will wait for a break below this area right here near the 137.45. This way, the pair kind of would confirm a forthcoming lower low here from the very short-term perspective, of course, and we could then target the 136.56 level marked by the low of the 4th of June. So good potential target, but first we need to see this one dropping below the 137.45 level. But as you can see, the more likely scenario here is to the upside, but again, we need to see that confirmation close at least of a 4-hour candle above the 138.17 level before aiming for further higher areas. USDCHF. Now again, we've talked about this one previously, and actually this is something that we've posted here today on our JFD research page here on TradingView. And basically what we mentioned here was that we are waiting for a clear break either through the upper side here of the lower side of this little range that we've got here. And as you can see, the pair now is pushing towards the upper side here. It's kind of flirting with it. It's trying to break it. Let's see if it actually manages to stay above this barrier here. And by the way, just to mention, the barrier is around the 0.9949 level. If we see a nice good close above this, yep, that's great. But as you can see here by another line here that I've got, near the 0.9962, just for that better confirmation. Basically, just ideally for that better confirmation, a nice good break and a close above this could potentially open the door towards slightly higher levels. This is where we will aim, of course, for the psychological 1 level, or even a little bit higher here near the 1.0025 zone, which in a way coincides right now with the 200 EMA here on the 4-hour chart. That's of course in terms of the upside. That's of course if we see a nice good close initially, a nice good close above the 0.9949, and then if we see a nice good pop above the 0.9962 level. So keep your eyes on these two zones, these two hurdles. We'll see how this is going to play out, but for now it seems that it's trying to push further up. And the euro dollar, and so if the USDCHF was pushing higher, then as you probably understood now, euro dollar is kind of selling off. So a little bit, of course, not much, but the most important thing is that it's breaking its key support zone here near the or I shouldn't say near, but the one that's taken here, the upside support line taken from the low of the 31st of May. Now of course the day is not finished yet. We did have already a break today, but it pushed back above it, so in a way we could see a repetition of the same scenario. So that's why be very careful right now. Still, in order for us to consider the upside, we're waiting for that break above the 1.1348 zone, which is marked by the high of last week. But as you can see now, the upside could be slightly off the table. We're going to focus now on the downside a little bit, but nevertheless, in order to consider further declines, ideally we would like to see a drop below the 1.1290 zone here, approximately around there, guys, near the lows of the 10th of June, and this way we could then target further declines. We could target the 1.1250 or even this 200 EMA on the 4-hour chart. For now, of course, it is still slightly below this upside support line. Of course, this is seen as a bearish sign. Also, in addition to that, it's trading kind of below the pivot right now, so also kind of adding a little bit of bearishness to all this. But like I said, the day is not finished yet. We need to see that nice good close of the 4-hour candle below this line, below this upside support line, below this pivot, in order to kind of consider further declines. This is, like I said, if we see something like that, then this increases the chances for euro dollar to travel towards the 1.1290, basically to drop below the 1.13 level. But if that fails to withhold, now this is where it could turn out to be ugly for the bulls, for the euro USD bulls, and we could see this one sliding a little bit lower here towards the 1.1250, or like I said, this 200 EMA. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end. And if you want to join me tomorrow morning, as always, in my traders espresso, and that's 6 o'clock GMT time. For now, I hope you have a wonderful evening, and I'll see you later. Bye bye.